Following Tesla's recent price cut, there have been a lot of expectations for the car company this year. Several analysts foresee Tesla recording enormous demand for all quarters of the years, and some even predict the automaker could produce as many as 2 million vehicles this year. But the question remains, can Tesla possibly produce up to 2 million vehicles in 2023? Let's see. But before we get going, don't forget to watch until the end so you don't miss out on all the great content in this video. Hey guys, welcome back to Tesla Tomorrow. Tesla is gradually on its way to becoming the most valuable car company in the world, but this will take some time, effort, and execution in all its existing and new factories, as well as energy storage and FSD. The car company makes electric vehicles, and these take time to ramp up and produce. Tesla slightly beat Wall Street's target for fourth quarter revenue and profit for 2022, despite a sharp decline in vehicle profit margins, and it's sought to reassure investors that it can cut costs to cope with recession, even as competition intensifies in the year ahead. Tesla's deep price cut in December and January have positioned the automaker as the initiator of a price war. However, its forecast of a 37% rise in car volume for the year to 1.8 million vehicles is down from its pace in 2022. Several Tesla investors are pricing in 2 million deliveries for 2023. And this is largely due to the fact that Elon Musk said on the earnings call that 2 million was possible, if nothing really goes wrong. That means no major wars, catastrophes, or economic collapse. So just how possible is 2 million vehicle deliveries? And what would it take in order for Tesla to achieve that milestone? More details in this video, but before we get going, if you like this type of content, don't forget to hit the like button, subscribe, and turn on notifications to keep up to date on everything going on with Tesla. In its 2022 Q4 earnings report, Tesla said it expects to deliver 1.8 million vehicles in 2023, up 500,000 vehicles from a year earlier, and reflecting an increase of around 40%. However, Musk, who has missed his own ambitious sales targets for Tesla in recent years, said 2023 deliveries could hit 2 million vehicles without external disruption. According to Musk, if there is no unforeseen circumstances this year, then it might be able to deliver more cars. He said this during the company's Q4 2022 earnings call, stating that the internal production capacity of Tesla's factories is closer to 2 million cars. Musk addressed this issue at the start of a call with investors and analysts, stating that Tesla's price changes really make a difference for the average consumer. He also added that vehicle orders were roughly double production in January, leading to the automaker having to make small price increases for the Model Y SUV. Although Musk cited that he expects a difficult recession this year, he still believes that the demand for Tesla vehicles is good despite a contraction in the automobile market as a whole. What will 2 million vehicle production mean for Tesla? Keep watching to find out. In 2022, Tesla delivered 1.31 million vehicles, and if the automaker hits 2 million cars this year, then that would be a growth rate increase of 53%, which doesn't seem too extreme, as investors have come to expect a 50% annual growth for Tesla. By estimating the current capacities of all Tesla factories, we find that production is roughly 250,000 a quarter for Shanghai and 150,000 for Fremont, or around 1.6 million annualized. And so, to reach 2 million production for the year, Tesla needs an additional 400,000 vehicles from its new factories in Berlin and Texas. Suppose these companies are at a run rate of 3,500 vehicles a week currently, then that's 360,000 a year from them. By adding that to 1.6 million vehicles from the other factories, Tesla will already be at 1.96 million vehicles. So we could say that Musk's prediction of 1.8 million cars for the year is actually less than the current run rates. There are around 250,000 Model Y vehicles a year out of Fremont, which would consume around 20 GWh of 2170 cells. This leaves 15 GWh of 2170 cells that can be used in Tesla's Gigafactory in Texas. That would equal around 180,000 Model Ys a year from Texas, which is about 3,500 a week. 4680 battery Progress is able to produce 1,000 Model Y vehicles a week. This would mean an additional 50,000 a year, taking production number from 1.96 million to 2.01 million for the year. And that is pretty much the total cell capacity Tesla currently has, and is about the same run rate in Giga Berlin and Giga Texas. Tesla's sales prospects automakers are a key focus for investors, and the company said it maintains a long-term target of a compounded 50% annual rise in sales, and we believe this has guided the majority of its production plans for the year. The car company cited that it will disclose plans for a next-generation vehicle platform at its Investor Day in March. According to Edmunds' executive director of Insights, Jessica Caldwell, Tesla's vehicles are all in desperate need of updates beyond software. She stated Tesla will largely depend on the cheaper unit as well as Model 3 and Model Y to bring EVs to the masses. Although this shouldn't be too much of a task for Tesla, there could be possible unforeseen hindrances. In recent years, Tesla has repeatedly encountered a number of problems in the global setting, which have had a negative impact on its development. In 2020, the pandemic affected the entire economy, disrupting production in most industries. The consequences of this haunted the economy for 2 years until manufacturers and other companies were able to adapt to new realities and restore their activities. Likewise, in 2022, while the effects of COVID-19 eased significantly, the Russian-Ukraine crisis affected the global economy with a negative impact on Tesla as well. The macroeconomic environment in the United States was also dealt a heavy blow, having a negative impact on the development of the company. There are so many things that Tesla can possibly achieve this year, but this is not entirely up to the automaker. Tesla said that it does not expect meaningful near-term volume growth from China since its Shanghai factory was running near full capacity, rebounding from production challenges earlier this year. Sophie Lund-Yates, an analyst at Hargreaves Lansdown, also noted that even a small cooling of demand will have significant implications for the car company. Tesla is relying on older products, and Musk has said its Cybertruck would not begin volume production until next year. According to previous reports, the highly anticipated model would not be produced in volume until late this year. Also, price cuts may affect Tesla's margins in the coming months. The automaker stated that its automotive profit margins, which dropped to a 2-year low of 25.9% in the reported quarter, would be above 20%, pressured by costs of ramping up battery production and new factories in Berlin and Texas, as well as higher raw material, commodity, logistics, and warranty costs. Margins generally are expected to be under further pressure from its aggressive price cuts. Tesla had made a series of price increases since early 2021, but recently reversed course and offered discounts in December in the United States, followed by price cuts of as much as 20% in January. These price cuts seem to have caused fears for investors. However, there are several reasons to stay optimistic. Despite such extreme price cuts of about an average of 20% across all markets, Tesla is still able to generate impressive gross margins. Analysts had said Tesla's profitability gave it room to cut prices and pressure rivals, meaning the company's $9,000 in net profit per vehicle in the past quarter was more than 7 times the comparable figure for Toyota in the third quarter of 2022. Luckily, gross margins are not even the most important margins, it's all about operating margin. And the difference between gross margin and operating margin is the operating expenses that Tesla incurs. Tesla has done an incredible job in getting their operating expenses as low as it is, and this value does not seem to increase very much as Tesla's production increases. As Tesla increases supply, there is a need to reduce prices in order to get new demand for the additional supply. And since operating cost remains a relatively fixed cost, this means that the OPEX per vehicle is reducing each time too. In 2022, Tesla had its OPEX at $7.2 billion, with 1.31 million vehicles delivered. This ends up at about $5,500 of operating expenses per vehicle. If OPEX remained the same for 2023, and Tesla hits 2 million vehicles, then the operating expenses per vehicle could reduce to $3,600, although this would increase a bit. However, even if OPEX was $8 billion for the year, that reduces to $4,000 per vehicle, which is a reduction of $1,500 per vehicle, and all additional operating profits. Tesla has a strong market advantage when it comes to pricing. This is one major operating leverage for the automaker, and as Tesla continues to ramp, the leverage increases with it. Although 2 million deliveries for a year is a big deal, when Tesla starts getting up into the multiple millions, then the operating expenses per vehicle will start to significantly reduce, leaving more room for more cars to be produced. Do you think Tesla can actually do 2 million cars this year? Let us know down below, and don't forget to tell us what your valuation of Tesla is. And if you want to know more about what Tesla's been up to in the last few days, go ahead and click on this next video on your screen. See you there.